Why, hello there. How's it going? It's towards the end of March in 2022, and this video is going to be a video about payroll and tax theory. And it's really going to be more of an abstract video, but we are going to be using real numbers and a few applications I've built in Microsoft Excel to keep track of taxes as well as payroll to help you understand what you're doing. Kind of when you take a step back and you think about what the point of payroll withholding or pay as you go withholding, sometimes they call it, when you get a paycheck every week, a portion of it goes to the federal government, a portion of it goes to the state government if state tax applies. And how is that amount calculated? Is it correct? Is it going to be right at the end of the year? We're going to talk about how you can understand where all those numbers come from, help estimate your own tax with the two applications that we have, the Payroll and Excel program right here, as well as the Tax Simulator in Excel, which right now is the 2021 Tax Simulator in Excel. We're going to show you how these two are kind of related, and this is the first time I've ever done a video with both of them, so I'm going to be referring people who purchased the products to watch this video if you have questions about understanding whether or not the withholding amounts are accurate on your paycheck. So let's talk about that. So when you think about what you're really doing is throughout the year you're trying to estimate what money you're going to owe the federal government and potentially the state if you have state tax. So right now I'm in California, beautiful California. It's a gorgeous day. And it's oftentimes a gorgeous day in California, and there's a lot of business in California. And California taxes pretty heavily, actually. So we'll talk about a California residency and what that will look like in the file, what you need to fill out, and how that relates to annual federal liability in the tax file. So let's assume Billy Gates lives in California. Is Bill Gates married? Actually, probably yes, right now. Form D4, that's a California form you would need to answer questions about. And of course, you would need to answer the state filing status as well on the D4. Then, more specifically in this file, we need to talk about W4s and 2022 or 2020 later W4s, which is the newer W4 that everyone really should be on if you want to try to get this thing accurate. The new W4 has, it looks like, 5 really specific questions that everyone needs to at least take a look at or answer. Question is, what is your filing status? Is it single or married filing separately, which are basically the same status? Is it married filing jointly? Is it head of household? This comes into play in the tax file as well, because the tax file asks you the same question. Married filing jointly, married filing separately, right? So we're going married filing separately, right, is what we're doing here with this person. Is box 2C checked on the W4? We're talking about the new W4 that your employee needs to fill out. This is about whether or not they have dual incomes, or two jobs, actually, I should say, two jobs of the same person. That's why most people are going to answer this no, but if you answer yes, more withholding is going to happen, okay? Other income, other deductions, and dependents. Dependents is an amount. Like if you have a child that's a dependent here, it's $2,000, I believe, per child. I think is what it is. You have to look at the actual form, but you need to put that amount in there. When you do that, what that information is supposed to do is it's supposed to kind of guess what your tax liability information is. Because you have questions about on your actual tax return. This is the Form 1040 simulator that we have here. We start answering these questions. Did you do any Bitcoin? Can someone claim you as a dependent? Probably not. Maybe they can if you're younger and you're in school or something and you're 18 years old or less or whatever, and you're filing a return. Maybe they can, but if you're an adult and you're the one that has dependents, you're not our dependent, you would say, no, nobody can claim me as a dependent. Are you blind? I am, but I answer no. I'm not completely blind. Number of dependents that qualify for the child tax credit. Interesting question, right? Say you have a couple kids. Maybe you have a lot of kids. This kind of matters with your withholding, right? But whatever that number is, there. The number of other dependents. You've got to read the form to see what these actual questions, what the instructions are for these questions, but you can look at the form right here, right? And just click it and stuff will open up and you will be able to go through exactly what these questions are and also look at the instructions to make sure that you are applying the proper dependent value to which dependent is. The point is when you start to do all this, and then you start to estimate wages and estimate expenses. Like, say you're talking about somebody who makes $100,000 a year. Okay, this married filing separately person is going to make $100,000 a year. Well, let's go back to the payroll file real quick. This person's in California. They're married filing separately. I didn't give them any dependents in here. All right, I said no amount right here. But I just said that they have dependents in the tax file. All right, that means that whether or not you're recording dependents, you got to put that amount here. It was 2 dependents, going to be $4,000. You need to put right there. All right, so that's how the W-4 and your tax return are kind of related. Is you need to do both of those things. So we're actually moving pretty fast here. Don't think this is a slow video. We're moving very, very fast, as you'll see. So let's assume this person makes $100,000 a year, or whatever they make. Now, in the payroll file, okay, we need to go look at one of their paychecks to make sure we're doing this right. This is a weekly payroll file. That means 52 periods in the year. So this very first paycheck, I want to give this person equals $100,000, 2, divided by 52. I want to give this person almost $2,000 in gross compensation is what I'm doing right here. So I've added that into the first pay period, and we're going to go look at what their paycheck says. Look at what their pay stub says. It says that on this $2,000 that they should withhold $207 of federal tax, almost $69 of California tax. So what does this mean? What does this mean? This means that every single paycheck, if the exact amount of money was on the same paycheck, every paycheck for the whole year, for all 52 weeks, that it would be this number times 52 will be the total amount of withholding for the year. That's $10,764, right? Well, let's go look at the tax file and see if that's right. Because believe it or not, once you choose a filing status and you let this person just have a standard deduction, which is somewhere down here, there's a bunch of other forms we could go and a million other questions we could answer. But we're giving this person the standard deduction of $12,550. We're assuming they're not itemizing deductions on the Schedule A. None of that. You get to scroll down and say, how much does this person owe? Wait a minute. They owe $15,000. They don't owe $10,000. They owe $15,000. So what's going on? Is the payroll file working right, or is the payroll file not working right? And are you under withholding? And the answer is we need to look at our deductions better. We need to make sure that we have the correct amount of withholding. And then you really need to go through all the child tax credit options and determine if this is accurate. Because we've given this person just a married filing separately, and it's saying that their liability is higher than $10,000. Now, I'm not concerned about that, and I'll tell you why. I'll tell you why. So the formulas that are used to determine the correct payroll withholding that this file uses and that are based off of the publication 15 clearly do create variances, and that is why they are so complicated. For example, this person may work 2 jobs. Okay? If they work 2 jobs, and that's kind of sort of being reflected in their tax return, but we don't see it, guess what happens to the withholding? Let's look at the withholding. All of a sudden, this withholding went up to $309 now. And if we multiply that times 52, all of a sudden now we're at $16,068. And what did we owe for the year? $15,000, right? So what's fascinating is to run your income through this simulator and then check the payroll file to make sure that you're right at the end of the year. Because it matters how many dependents you have. It matters how many jobs you have. All these things. And what the government is trying to do in the publication 15 is certainly a valiant effort, but nothing is better than the actual amount at what you file on your actual tax return at the end of the year to determine exactly what you owe. So that's kind of why payroll and tax don't always agree and are a little complicated, and everyone's asking the question, Am I withholding enough? Should I be withholding enough? Until you really simulate your tax return with close to accurate numbers, you're not actually going to know. And the payroll withholding, usually people like to over withhold. You know, they want to say, oh, I'm scared I'm not going to withhold enough, so I'll go into this section where it says additional federal tax withholding right over here, and I'm like, I'm concerned I need to withhold a little more every pay period, so I'm going to withhold $100 every pay period extra. And that's how you can do that, and that will filter itself right into the pay stub. There, it's now 400 instead of 309, and your total liability for the year, you may get a refund because you're over withholding now. You now withheld 21 grand for the year, even though you only owe 15 grand. Now, I'm going kind of fast and throwing numbers at you, but I hope that I've communicated the fact that answering the question about whether or not you're withholding the right amount is a very answerable question if you view your simulated tax return in this format, which is why I built this file for everyone. I built it for myself, but I've added in stuff that I don't even use so that everyone can try to use this and get a very quick liability for what they have. So I think I'm going to start throwing this right along with the payroll file. I think I'm going to make it part of the subscription because I want everyone to have it. It's too resourceful not to use. So that, I hope, answers some questions, and I'm going to be doing videos about all these forms. That's what I'm going to do next. I'm going to go through every single form, talk about what all the questions are, what's a formula in here, what's not, where you need to look at bringing in other information like your small business stuff. You know, if you have your own business, you got to bring in your expenses and so subtotal those up somewhere else and then kind of bring them in here, connect them, but you can. And have this thing just totally dynamic for you. But there's still a lot of forms to do. So, all right, guys, that is the update right now. I'm going to continue working on all these tax forms because it's tax time. I mean, we've got 20 days, 25 days until taxes are due. If you don't file an extension, and even if you do file an extension, here's something else that's important. Even if you do file an extension, you have to pay the money you owe by that April 17th, whatever deadline, or April 18th, whatever it is this year. It's right around a couple days after April 15th because of a holiday or weekend or something. So you need to pay, you're supposed to pay the estimate when your return is due, even if you file an extension. So this, something like this really comes in handy to estimate what your liability will actually be without filling out all the forms in their entirety yet online. All right, so good luck. Good luck, everyone. May all your taxes be easy. Enjoy the day, and you know, don't stress out. IRS they're good to work with. Honestly, I used to work there a long time ago. I was an intern there over 20 years ago, but I can tell you they're good people. You know, you got to just file your taxes. They're going to work with you. It's not going to be awful in most instances. They're willing to work with you, and they understand forms are complicated, but you can fill these things out yourself and do the best you can, and they'll even adjust your return if you make errors and stuff like that are obvious. But this file will hopefully help you avoid making those obvious errors by formulating everything that can be formulated. All right, good luck, everyone. May all your taxes be easy. Make it so.